Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the island. It is August 25th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen, concluding with a speech by both Mario Draghi and Janet Yellen in Jackson Hole. We have had some extreme volatility in the markets today. We thought we might see that, but gold did end up finishing on a strong note, up about $4.50 at $12.9650. Now realize the market did trade over 1300 with an intraday high of 1301, and it also hit 1280 on the low. We will look at a specific short-term chart to discuss that in detail when we pull up our technical studies. Silver up about 9 cents, over $17 at $17.06. And it was all about the dollar again today. Dollar just devastated, down over 0.7% in terms of value, 92.45, a decline of 74 points. That on statements made by Yellen and the fact that there is the perception that there will not be another interest rate hike, as well as some real chaos in the Capitol in regards to the debt ceiling, which is really looming overhead. Dow Jones Industrial up 30 points at 21,813. Mixed bag with the NASDAQ lower by 5 points at 62.65, and a 4-point rise in the Standard & Poor's closing at 24.43. For those that watch only the weekend review, I have a special offer. It's the only time I've ever done this, and I'll tell you about it in detail at the end of the show. Traders, as I said in my opening statement, what a week this has been. We have gold ending on a solid note, up $4, although well off the highs today, closing at $12.9630. That's actually where we have it set right now. I draw your attention to recent activity in the market to that elusive $1,300. I've just put a white line across that so you can see that earlier during the week we did see the market really spike well above that price point, going as high as 1307. I'm looking at a bar chart because I want to focus on the highs. We had a number of occasions this week in which we touched 13, and of course today we had an intraday high of 1301. Traders, one of the points that I have been making throughout this entire week is that I see a key distinction in terms of past times that gold has attempted to breach the $1,300 mark and how that differs from what we're looking at now. My point is this. On the last two occasions when we came close to 1300, we would hit that point, and then on the following day or a day later, we would really sell off and move back down to lower pricing. We had the same thing here, a tremendous rally to the upside and a perfect V in that it only took one day before the market hit its top and then began to trade lower. That on both occasions. Now, the reason I believe we are truly witnessing something different right now is that when we look at this rally that has been currently occurring, we did hit this high top here. We had a couple of occasions where we came close to it and the market then sold back off. But we had this V here, but it was very short-lived because the market traded to this low of 1272 and from there moved back to higher ground. We are now having a consolidation period in which I believe the price point in gold is developing a base just between 1280 and 1300. That's what we're looking at here. And what that tells me is that it's just a matter of time. It's not if, but when gold will breach above $1,300. I believe that that is absolutely written into the cards, and it is something that we will see occur maybe next week, but certainly within very near term. And traders, as we have spoken about on a number of occasions, a lot of the most recent rallies in gold has been directly predicated upon dollar weakness. The dollar has been in an absolute free fall since the beginning of this year, or at the end of last year, when the dollar index was trading as high as 103 and change. From there, we have seen this market just lose dramatic ground. Currently at 92.50, we have seen this market lose about 11% in value when compared to the basket of currencies that the dollar index is paired against. You also know that I have been on record looking at 92 as my current target for where the dollar could find support. Initially, that is where I've been looking for it to go. We are very close to that price point now, trading at 92.50. We do have some historical reference that shows that that could be a price point in which the dollar finds support. However, if it does not, on a technical basis, when we look at this dramatic rise that occurred in 2014, taking the dollar index from just below 80 to just about 100 on the index, we could see a dramatic fall from grace in the dollar index, because on a technical basis, there really isn't any strong support until about 84 on the dollar index. And traders, lastly, I do have to discuss our current trade and the fact that this market became quite volatile as Yellen spoke and knocked the majority of our subscribers out with a very small profit, as we were in at 83 and our stop was just below 85. So you picked up between $1 and $2 in profit. We did not take a loss on the trade, but for those that got knocked out, we are officially flat in the market and we will mark ourselves out of this trade. However, I do know that I have many clients that will put it much looser than that price point. If you had your stop at 1280 or below, you are still effectively long in this market. To that end, I'm asking my daily subscribers that are still long to email me and let me know if you got stopped out today and took a small profit, to please let me know so I can act accordingly next week and address both camps. Now, to that trade, we are looking at a very short-term chart. This chart is 30 minutes in length. For the better part of the evening, and actually the better part of the aftermath, gold was trading in terms of a 30-minute time cycle in a relatively flat and defined narrow trading range. That didn't occur when we had Yellen speak, because we had a tremendous spike up to 302 in a half hour. From there, we had a dramatic spike down, taking the market as low as our support level at 1280. You can see that as a 61% retracement, and then within the next half hour recovered completely above the former price to form a new base at around 1295. Market's currently trading at 1296. So there's no way to avoid the fact that during this particular time within the marketplace, the majority of our traders did pull a small profit, but they did get stopped out of that long trade. We will look to re-enter the market next week. It's simply a matter of timing, but traders, I absolutely believe that not only are we headed to 1300, but we're headed to 1300 and beyond. Traders, absolutely no doubt, we had a volatile week. We did have the market move higher. We did get stopped out of our trade with a small profit, the majority of us, but the net result is that the last three trades have been profitable, and I believe that there is much more to come. I think that we should see gold trade above 1300 next week. My initial target is at least 1320, and some of my studies are alluding to the possibility of a high of 1350 over this next month. For those that only look at the weekend review, as I told you at the beginning of the show, I have a special offer. For first-time viewers, you can go to our website, thegoldforecast.com, and you will see a link that will allow you to get your first month for only $19.95. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for another daily update and review. Bye-bye.